Hi everyone, good afternoon, and welcome back to my weekend market update. If you've been following me, you will remember we talked about identifying a range last week across the assets I'm monitoring, which includes the GBPUSD, USDJPY, and the gold commodity. And I went on to explain how the market was just waiting for something big to break the deadlock. Well, guess what? The ranges finally broke last week, except for the USDJPY, which is still locked in within the range, and that in itself tells a story. Today, we are going to walk through each market one at a time. We'll look at what happened last week, why it happened, and most importantly, what I am looking for this coming week. Let's start with the GBP USD. Now, what you see on your screen right now was the setup we marked out prior to the beginning of last week, where I did emphasize how price action was confined within the 1.358 and the 1.35150, giving us an insight into the indecision going on prior to the beginning of last week. We saw early in the week price action did break out of the range bound structure and went to as high as the 1.37255 at the start of the week, but notice how it couldn't survive the return of the US dollar strength and we saw price drop significantly. Now, it wasn't really about weakness from the United Kingdom side. Inflation from the UK came in right on expectations, nothing from the pound to get excited about. But the dollar, it caught some energy again thanks to the Fed chairman's cautious tone and strong US Treasury bond yield. That shift flipped the script and sellers stepped back in, pushing the GBP USD back under that range bound to close last week trading session below structure. Now, as we head into the new week, it appears price action is evolving into a new trading setup, which I was able to mark out here. Now, this is the structure I am looking forward to next week. And what I did here was to take into account the character of price action since the beginning of August. So I'm talking about 6 to 7 weeks of historical data. And one of the major things I was able to highlight here is the fact that the pound sterling is on an uptrend. And after connecting the series of higher lows, we have this beautiful ascending trend line to work with. Look at how price has been respecting the trend line. We have a higher high here. Price drop down, retrace into the trend line, then we have a higher high, and right now you can see how price action closed exactly along the trend line. And of course, you know how we use our ascending trend lines. As long as price action remains above them, we want to continue to look out for patterns and structures that support buying ideas. We are not considering selling unless this trend line is breached and broken to the downside. And to help me navigate this trend line, I do have my key level for next week at the psychological area, the 1.34700 area. So depending on how price reacts to this confluence here will determine if we are going to be going bullish or bearish next week. Now, looking ahead, we've got some juicy catalysts from both economic dockets. We have the Bank of England's governor coming in on Monday. On Tuesday, we have the S&P Global PMIs from both the UK and the US. On that same day, we also have the Fed chairman speech. On Thursday, we have the GDP from the United States. And then on Friday, we are looking at the Core PCE numbers. Powell has made it clear this is what he is watching to make his next decision. Now, here's the deal. If PCE cools down and Powell sounds dovish, that gives the GBP USD a chance to reclaim its upside momentum. So that means We could see buy pressure around this area to support that uptrend scenario from there. But if Core PCE stays sticky and Powell keeps the hawkish edge, then sellers can keep pressing this lower, potentially towards this support line here at the 1.31600 level. So technically, notice how price is sitting above this newly identified trend line. So for me, I guess we're at a critical juncture where, depending on how price reacts to that area, will determine whether we are going to the upside. And based on what I see here on Friday, markets are nervous about the UK economy. Growth is soft, inflation remains sticky. This is evident with this little consolidation we saw up right here. So the question now is, will buyers have much confidence to hold position above this area, or are we going to see price drop from this particular structure? So the bottom line here is the pound sterling is going to dance to the tune of the dollar sentiment in the coming week. All right, so that is the cable. Now let's check on the dollar yen. Unlike the cable, this one is still trapped within the range. Now remember, last week we said price was confined within the 149.00 and the 146.500 area, right? Why is this happening? Well, because neither side gave us a big enough push. On the Japanese side, CPI cooled from 3.1% to 2.7% year on year, still above target, but a little bit easing at the moment. So the Bank of Japan isn't really rushing to hike interest rate at this point. They kept their interest rate at 0.5%. I think this came in on Friday right here. And the Bank of Japan's governor only hinted at slowly unwinding stimulus. Nothing aggressive here. And on the other side of the pond, the the Fed, may have eased its rate by 25 basis points, but Powell stayed cautious and the US Treasury bond yield is still staying strong at the moment. So the result is stalemate, right? Price just sat there calling inside the box, and honestly, traders are just waiting for that next spark, likely the Core PCE or the CPI. Now, going into the new week, the structure still remains the same. So this is what I am looking at here. Price still remains confined within the 149 and the 146-ish area, as you will see here. And at this point, I do have two new structures added to the range-bound structure. One of it is this descending trend line, which is captured right here. And look what happened in the last couple of weeks. We saw price break out of the trend line, though still within the range-bound structure, and price continued to respect it, retest it multiple times, finding buy pressure around that area. Now, the second structure I'm using here is the key level at the psychological area at the 148.00 level. Now, look at this. This area here had consistently served as a selling niche since the beginning of this month. We saw it happen here. We saw it happen last week, I think, or is it 2 weeks ago? And look at what happened here last week. We saw a little bit of choppiness in the market around this area, making it a crucial spot to look out for going into next week. Now, if we look at the economic calendar, the big drivers will be Japan's CPI data coming in on Thursday, as you will see here, and of course the US Core PCE on Friday. Now, if PCE comes in hot, the dollar strengthens and the USDJPY could push against the upside of this range that we identified here, maybe climbing above the 148, going ahead to break out the 149 area to emphasize buyer strength here. But if the PCE softens or Japan surprises with stronger inflation, we could finally see yen strengthen and break down below the support here at the 146.200. In fact, by the time price breaks down the 146.200, price will be below this descending trend line to further confirm seller's trend. So at that point, I will be willing to join a sell to the downside. So basically, this range is a spring right now, waiting for data to release the tension and give us an insight into where price will be going. All right, that's the dollar yen. Now let's check on the gold commodity. The gold, on the other hand, did the exact opposite of the yen. In fact, you saw what happened. This was the range we were looking at the beginning of last week. It was confined between the 3,655 and the 3,625. And of course, see what happened here. We saw it break free all the way up, testing that all-time record high again at the 3,708, right? And then we saw it retrace back into structure, and as we are speaking, it's still holding strong as it appears to be finding support here with a strong intent of continuing the uptrend move. Now, why is the sentiment leaning in favor of the gold commodity? Well, basically, traders are leaning into the idea that inflation is cooling and the Fed might eventually soften interest rates further, hence safe haven demand may remain alive as gold has all the fuel it needed to maintain its momentum. And once that breakout happened and was confirmed last week, momentum carried it further, and it appears we are still sitting within a support area that could push price further to the upside. Now, going into next week, this is the new structure I am looking at. And right here, all I did was to consider what has been going on since the beginning of this month. And this was what I was able to come up with. A beautiful ascending trend line, as you will see here. We saw how price broke above the trend line the previous Friday. And since the beginning of last week, we saw price continue to maintain buy pressure above that structure to emphasize the strength of the buyers in this particular market. And with my key level situated at the 3,635, I want to maintain a bullish bias going into next week. Now, the only condition that will make me consider selling the gold on a long-term perspective is if price can break down, retest the structure to the downside. So a breakdown of both the trend line and the 3,635 could be a sweet spot for me to consider selling. But if price still remains above this trend line, I will maintain a bullish bias. We could see price drop into structure, buy pressure resume here again to continue the uptrend move. But if you are a day trader, short-term trader, selling niche could be identified here. Look at this descending trend line I was able to spot here, and look at how price closed exactly along the 3,680, lining up with that trend line where we could see selling pressure resume here, retracing back into structure to continue the uptrend move, or even breaking into the downside, or a breakout of this 3,680 to confirm that buyers are getting stronger. So going into next week, again, the Core PCE remains the headline number, as you can see here, because it's going to be telling us if the Fed can keep cutting interest rate or if the US dollar is going to fight back. And then we also have the Fed chairman speech on Tuesday right here. So like I did say earlier, if PCE comes in lower, that fuels the narrative of cooling inflation, and gold could get the wings to extend higher into new territory, or even break out of this record high at the 3,708. But if PCE surprises higher, don't be shocked to see gold pull back. It could go back to us breaking down the trend line, like I said earlier, and going to as far back down as the 3,525 zone to test that support area, which was once tested at the beginning of this month. So we want to be keeping our eyes on the US Treasury bond yield as well. Very important. If they continue to tick up, gold feels the pressure. And if they stay calm or fall, gold will keep its shine, rising to probably break out of the all-time record high. So to sum it up from this point, the pound still needs strength to maintain demand above the ascending trend line we spotted here at the 1.34700 on the 4 hours time frame. And while the dollar yen is still stuck and may continue to trade sideways and waiting for the data catalyst to thrive. And then on the gold, gold is still holding very strong, as you can see, but it's all about the PCE and the Fed chairman's speech this week, and it will continue to stay supported if inflation eases. So those are my key takeaways going into next week. Remember, these levels are our guides, and don't just predict, let's prepare accordingly using this narrative. And if this breakdown helped you get clearer picture on the week ahead, do me a favor, drop a like and let me know your thoughts in the comment section. I'll be updating there as the new week kicks off. Until then, trade smart, trade consciously.